rand extended losses earlier today on concerns over future challenges for the government of national unity and after trading turbulently following the announcement of President Cyril Ramaphosa's cabinet. The U.S. Federal Reserve's Jerome Powell will speak later this afternoon, and markets will listen for hints on the future interest rate path of the world's biggest economy. The risk-sensitive currency, the rand that is, often takes cues from global drivers like U.S. monetary policy in addition to local factors. U.S. stock futures are down after the major averages closed higher to start the second half of 2024 as tech stocks outperformed. Wall Street is coming off a positive session for the benchmarks. Investors are deliberating whether the strong start to the year can continue in the back half of this year. To give us more perspective on the markets, we are joined by Makwe Masilela from Makwe Fund Managers. Makwe, thank you so much for your time. Let's talk about the rand to begin with in terms of this conversation. It's been quite interesting to see the moves because from Friday going into Monday, we moved from 1852 to around 1796 and we're back above 18. And I'm wondering whether this is the market being cautious around the GNU cabinet, or is it a sense of perhaps market participants are looking at the dollar rising as investors weigh in this possibility of a Trump presidency?
I think it's both, to the fact that we know that the markets, to some extent, they expected this kind of cabinet because of the exchanges that we've seen with the letters when parties were trying to negotiate. So that didn't come much as a surprise, but it was more of a confirmation that what markets were expecting. But yes, you are right. The fact that there's a possibility that Donald Trump might come back again as a president, we've seen earlier in the sessions, the dollar firming up, we've seen the bonds extending losses, and all because traders are starting to worry about inflation risk and also worried about the steeper yields. And that is also now making the dollar to be strong as it is now, continuing to stand tall, and is having a negative impact on the rand, unfortunately.
So let's look at June specifically, because this is the month following the elections which took place on May 29th. Give us a sense here from the viewer's perspective in terms of the kind of inflows that you saw on your screen, particularly for the month of June as it relates to SA stocks.
Very decent inflows that we've seen, anything just above 6.5 billion rands coming from foreign players. And we've seen that in June itself, the all share was up 2.4%. The rand firmed around 1.7%. But if you look into the whole 6 months from January up until end of June, you can see that the all share was up just 3.7%. I'm stating that to highlight the fact that most of the gains were achieved mainly in June, and that's after having our elections, all parties or main parties accepting the elections outcome and also agreeing to form the government of national unity. That to investors, especially international investors, stated that we will expect to see an acceleration when it comes to economic reforms going forward. And you look into the cabinet itself, they didn't rock much of the boat. It's more of what has been happening before.
So let's talk about company news that came out this morning. We had ArcelorMittal releasing a trading update. Was there anything that stood out for you?
Yeah, I mean, the guys extending losses, by just over 160%. And we've seen that the World Steel Association saying production or consumption this year should increase by 1.7%. But when it comes to China, it continues to be strained because we've seen that the property market is struggling. There's no demand when it comes to infrastructure. And as well, the export increases that we've been seeing coming out of China since 2023 are continuing and are putting pressure on international steel markets. And hence we see that for the first 5 months of this year, exports coming from China increased by a whopping 15%. Locally, we've managed to increase our exports by 13%, and that's after increasing our production by 14%. But that tells you that demand is not great. Hence, we could export as much as what we have managed to produce. And yes, the guys expect to continue to operate their long business because they're trying to give all these initiatives to save the business more of a chance to try to work into this whole thing to see whether that business will ultimately be saved.
With this, idea of SA stocks being a hot property, especially now as we talk about this GNU cabinet, and it's quite interesting to see how this, bull market in SA Inc. is starting to broaden out. We're seeing it go into the mid caps as well as the small caps. And I'm wondering here whether you are actually getting a bit or participating in this so-called GNU party. Are you getting in on the action?
Yeah, definitely we have to, especially stocks that were oversold, even before the elections. We know that stocks that were overlooked, and we know that even internationally people were interested in tax, but now people are starting to look into the broader market, what is it that will start to benefit, especially when you start having more of stability, and not just about the elections, but also about interest rates that are expected that one or the other, whether it's later this year or early next year, should start coming down. So you are looking into those kind of sectors, and that's where you should be participating.
As I've mentioned in my intro, we've wrapped up the first half of the year. What are some of the questions that you are asking yourself as we kick off the second half?
We've seen and got confirmation that elections had a potential to rob the market. We've seen what happened with India. We've seen with the elections when it comes to Mexico. And we've just seen yesterday or so with that snap elections in France. Now the question is, with the US elections coming in, in November, what's going to be happening? And also the UK elections.
Okay, before I let you go, just quickly, one piece of data point that you're paying attention to for the rest of the week.
Non-farm payrolls coming out on Friday. That is the mother of all reports. That is the job numbers. We expect that those numbers will continue to confirm that the labor market continues to weaken. Then most probably maybe that will increase our bets that interest rates will be coming down sometime this year.
Makwe, thank you so much for your time. That is Makwe Masilela from Makwe Fund Managers.